Hi, everyone. Welcome to the TimingResearch.com Analyze Your Trade, episode number 100 for October 29th, 2019. My name is David Kosmeter. I'm the creator of TimingResearch.com, and today we'll be discussing your trade ideas. So over the last few days, about 30 people submitted up to 5 symbols each, and I've put the list together of the top requests, and we'll be going through as many of those as we can today. We are recording this at 4 p.m. Eastern Time, and I will release the recording onto Timing Research and the YouTube channel and as audio-only podcasts on all the podcast networks as soon as we're done recording. And you can be sure to subscribe to Timing Research and to get updates on that. Today, I have arranged for Dean Jenkins to join us. He was... This whole show was actually originally his idea, and him and I developed this show for Timing Research. But he hasn't been able to be on in a few months, and but he's back for the 100th episode. So glad to have him back. And
good to be here. Good to be here. Thanks for inviting me back, David. And if it doesn't go well, it's my fault.
I'm sure it'll be great. So, and then also Jim Kenney of Option Professor is here as well to moderate. So I'm going to go ahead and turn it over to Jim.
Great. Dean, great to have you back. Obviously, you started this thing, so thank you very much for getting this off the ground. The markets, as you know, are very much near their all-time highs in many cases, so this is a very good time for you to re-engage with us and give us a little bit of viewpoint on what you're seeing. But for newcomers to the broadcast, why don't you give a little background on yourself and a little bit about what you're doing at your company?
All right, so I'm Dean Jenkins, founder of followmetrades.com, and you can check that out at followmetrades.com. And I run a stock advisory service that picks stocks and options that I'm taking on my own account. People that subscribe can follow and take the same trades I do. I've got a track record that's audited, posted on my website. So that's my main thing is stock and options trading. I focus exclusively on equities and options. I also have a trading room in the mornings for an hour, and I have some educational programs, and I just enjoy trading, talking to traders. I'm kind of a geek that way. It's good to be here.
Well, it's excellent to get educated and also have an open book on some of the things that you're doing so people can not only learn, but they can see how you're putting some of these things into action. I think there's value there, and people will realize that more and more as we go through the show. We've got 15 stocks we're going to go through, so let's get on it here. Apple blew through the 235 area, and how do we feel about Apple right now in this place?
Well, let me bring it up. I was looking at the S&P 500, and maybe if I could just make a quick comment on the S&P here.
Sure.
Before we jump into the fruit salad of Apple. On S&P 500, which I think is the key index to pay attention to for the broad market. You can see this purple upper line I've drawn here was the July high. Of course, yesterday we went through that, got a all-time record close, and then today we put in an intraday high but pulled back. But in the short term, it looks like what used to be resistance, that was a triple top. Put in the high in September, we went and tested it, pulled back, and then for a few days we bumped against it, but now broke through. So it's looking in the short term like that prior resistance could now be a new support level and potentially on the new highs. We'll have to see tomorrow. Mr. Powell could blow that whole thing up. I think there's a 95% expectation built in of a quarter-point rate cut. And so if they deliver that, probably continue on. If they don't, look out below. And, the market today was kind of volatile, opened down, went up, and then pulled back, not too far from its, that's the intraday futures I'm looking at for the S&P 500. So pretty choppy, and I think everybody's waiting on Mr. Powell's announcement tomorrow. And of course, everybody's on the edge of their seat to see if we actually do ink a trade deal with China. And there was, tweet earlier that, man, it's going to happen in Chile. Well, maybe not Chile, but it's still going to happen. And so, who knows? But, the market's on edge for those two big developments in the short term. So now with that backdrop, let's go look at
Could I ask you a quick question? Do you have RSI that you can put up there that might give us an indication of the relationship between RSI and the chart on the S&P? Because, you know, if the RSI was lagging quite a bit, that might be a sign of a divergence. Or do you don't have RSI handy?
I don't use RSI.
That's not one of your deals? Okay. All right, let's switch over to Apple and see what's cooking.
Okay, so big picture for me on Apple. If we look here, I'm a Elliott Wave guy, a very simple version of Elliott Wave, and Apple's been going up for a long time in a very simple version of Elliott Wave that looks like a wave 3, and then a wave 4 correction, perfect correction back into this Fibonacci retracement zone, and then on up into a wave 5 extension. Perfect. It just was, you couldn't get a cleaner, more predictable price move than we saw on Apple. And now here it is up in this wave 5 target zone. And so typically after that, we don't know how far it will go up into there. The region is between these two green lines. So we got a pretty big pullback today. You can see I drew a wedge back here in August as it was stalling a little bit. And I said, if it breaks this wedge, whichever way it breaks, it's going to go, it's going to have follow through in that direction. Well, it broke up and up into the target zone. That was the likely outcome. So here we sit kind of in the middle of the target zone, had a pretty good pullback today on an overall update on the market. And the big deal on Apple is they announce earnings tomorrow after the close. So I certainly wouldn't take a trade into earnings unless you were playing some kind of earnings strategy. Just on the short-term volatility of an earnings move, and actually have a strategy for that. But in terms of a directional trade, I would wait for earnings and then see if there's a little more oomph left to the upside, right? And if it starts to break down, then we could have a correction. So it's at a key decision point here. And, I'm not trading Apple, certainly not until after earnings, and then we'll see if there's a little bit left in this uptrend. So that's kind of where I'm at.
Is there any straddle or strangle opportunity, or are the premiums pretty big?
Yeah, so that's my options play is straddles and strangles, and it's we go through. I've got a guy I work with together. We're just rolling out a new earnings strategy, and haven't run Apple through actually we did, and it didn't meet our criteria because it's a combination of what's the size of the probable move, and then what's the current IV and what's the current price, and is the size of the expected probable move going to make you money, right? Or is it already built in and you're going to pay too much, for premium at the money, and then even if you get the expected move, you're not going to make a profit. So it didn't really pass muster for us in terms of an option play at this point.
Okay, why don't we go to the next guy here, CFX. It's at a recent peak surrounded by lower peaks, and it'll be interesting to see how this sets up on the chart. This is industrial machinery, Colfax.
Colfax, and given that we're right in the throes of earnings season, one of the first things I look at is what's their date.
Mm-hmm. Good idea.
I use this website, this Earnings Whisperer. They got this whole whisper indicator thing I could care less about. This is one of the most accurate and easy to use databases of earnings dates that I've found. So I just typed the symbol in and it says, hey, Colfax is scheduled to report the 31st, so the day after tomorrow, after the open. So, we're one trading day away from Colfax earnings. So unless, again, and we're running that through the filter, it might be one of the ones we trade tomorrow and put on. But unless it was an earnings play, in terms of a directional or a swing trade, I don't take those types of trades into something disruptive like earnings. In terms of the chart, the big picture, it's been in a downtrend. Looks like it found some support and it's heading back up. We were actually looking for more lows, and that broke down. So now it's heading up. You could look at this as once you get through earnings, that's the big caveat for me, is once you get through earnings, right, you could evaluate this as a new trend, with this being, wave 1, 2, 3, nice 4 correction, and some kind of an extension up into a target zone where it's already at, and it's kind of in the middle. So not much left there, even if they have good results. I'd be looking for a high somewhere around the 35.78 level is kind of the max before this little sequence ends. So not a great candidate for me, unless again it meets our criteria for just trying to trade 1 or 2 days on the earnings pop, and we'll see if it passes through our filter tomorrow.
All right, next one up is silver. Had a huge move, got very overbought, and it's been trying to kind of consolidate, work off the overbought condition. What are you thinking on silver?
Let me get my chart right. Here we go. Silver. Been watching the metals. It's been tough, right?
No, they had a parabolic move,
Yeah. So, we could evaluate this again. A really simple, easy approach to Elliott wave. We're just looking for impulsive moves and corrections, right?
Mm-hmm.
So this would be wave 1, 2. This would be 3. 3. One of the things people do that drives them crazy with Elliott waves is try to impose wave counts where there are none. And it's got to be super clear like this one is, right? You see a big impulsive move, you look for a correction. After a correction, you look for a follow through. So this had, obviously, a big impulsive move, and you can see it here in the price oscillator, right? Big, big, big. So then after a big move, this was 1, 2, measure 2 to 3. See what the retracement was. We're looking for a retracement down into this Fibonacci retracement zone, 38.2 to 61.8. Well, it did it. And it had a nice sequence of low, lower, high, low. Started heading up. Now we got a high, higher low, new high. This pullback staying above the previous low. So this actually is an uptrend, and the momentum just shifted. So this could be a good entry opportunity for silver, right? And the extension on this looks something like this, the target zone being up over 1890. So that's not bad, and this could be a good entry level. And again, just using Dow theory, you can see that after this correction, low, lower, high, low, you got this beginning of the next leg up with a high, higher low, new high. And it's in the Ichimoku cloud. It's sitting at the 50, right? This lighter line is the 50-day simple moving average. The heavier one is the 200. Right? We did have this golden cross back here as the impulsive move took off. It's still above. So you might want to let it clear the Ichimoku cloud, clear the 50, really prove that this is taken off somewhere around 1695. And if it's going to take off, then there might be a good trade there. So that's not bad. It looks like a good watch list candidate to see, catch the next move up, and you do have a nice target up ahead there.
And the 1586 would be an all bets off kind of deal?
If it closes below the 50?
Right, below 1586. Or even higher.
And actually, all bets off. So let me pull up. Let me get a pen. Right? Got to draw. So here we got this nice sequence here of a low, lower, high. Oops, I'm really interested in the uptrend. So it's this high, higher low, new high. Now it's pulling back, but we really want to see it is do this all the way up into the target. Right? That's an uptrend. Charles Dow told us that 100 years ago. Right? So given this pattern, right, what would break that pattern? Well, if it went below this low here, that would be real concerning, right? Because then that pattern that we're looking for would have failed down here, right? So we just keep an eye on that. Where does it pull back to, and does it reverse and continue up? So if it took that out, you have to see, well, does it get restarted? Definitely, if it got below here, that would be, it's all over. It's done, right? It failed, right? This would be a warning level.
Right.
There we go.
Little lines in the sand, huh?
Yeah.
All right. That's the story on the metal, and a lot of people are in there, and I'm sure they're wondering why they're not making money after the big run-up, and they're probably wondering what the next direction could be. So that gives them some technical insight onto what some of the numbers might be to look at.
Yeah.
Next one up is going to be the big one, Home Depot. I heard that home prices dropped for the first time in a year, and I saw Lennar wasn't doing so good, and this one's getting a little bit of stuff.
I thought they went up.
No, they said the price of homes went down for the first time in a year. I don't know if the sales might still be good, but I guess the prices have moderated a bit.
Yeah.
And that's just where I heard on Bloomberg, so I don't know if it's true or not.
Yeah, I monitor these, because these affect the market.
Okay.
So
they're showing
3.2 increase, 3.2 year over year versus the 3.1. So there was a modest improvement in pricing.
Okay.
Yeah, because I that stuck out because I was watching that this morning. Didn't seem to help Home Depot, right? They were off today. This is another one, kind of like Apple, right? That it's finished a 5-wave sequence, really perfect. Big 3 up, big 4, perfect retracement right up into the target zone. And so now what's it going to do? You can see we're losing momentum here. In terms of earnings, it's in the back of my mind that they've already reported. November 19th. So they got a couple weeks before they report. So this looks like it's losing momentum. This was a great bullish trend. You just have to wonder, has it topped out? It's losing momentum. So I'm not keen on I don't think there's much left there. I think there's better long candidates. If you're in it, you might stay in it, have a stop right under here, see if it fails, and pay attention to that earnings date. But couldn't ask for a more orderly thing that followed the pattern, but it's kind of done.
The information at the bottom, you have the green and the red. I noticed that the green's pretty high during the move, and then the next move up to a new high, the green is lagging. Is that of significance?
Yeah, and it's bearish divergence, right? Even though the uptrend is continuing, the momentum is heading down, and that's a bad sign to join a trend. A long trend, when you start getting that divergence and loss of momentum, it's no crystal balls, but it's a sign that that long trend may be ending.
Well, next one up is Brazil. People want to know what's going on down Rio Way here. Let's see, it's at 44.62 today, off a little bit. Had a big run recently from the below 40 to over 44.
Yeah, Brazil. So this is, earlier I said I like a simple version of Elliott wave, and that people can drive themselves crazy trying to impose wave counts where they don't exist. This is an example where you might do that. You could make a case that this was an impulsive move up and then a correction, and now it's continuing. But what you see in this uptrend is, if you zoom in on it, right, is prior lows getting taken out in the uptrend. So you got higher highs, higher lows, lower lows, higher highs. That's an erratic market that I try to find things that are a little more orderly, that follow some rules. And so this one's tough. And then as you analyze the chart, you can see there's the all-time high, right, at least over the last few years. And then it made an approach to it and failed. And what we can see is these swings are getting tighter, right? So this, we had this big swing here and this big swing here, and then we had this and we had this, and this thing's coiling up into, almost a kind of wedge pattern. So given its kind of volatility and the narrowing, right, from, something like this to something like this, until it really breaks through that with some kind of momentum, one direction or the other, it's not my thing.
Do you watch volume much at all, or are you more focused on what you're talking about now?
Yeah, I look at volume in terms of liquidity, and I make sure that if I'm going to trade a market, that it's got sufficient volume so I can get good fills on my entries and exits. Beyond that, I don't look at volume changes as an indicator. I can't tell you the mind-numbing hours I spent, because I really wanted that to be a predictor, and I spent mind-numbing hours studying that, try to correlate that, and and in the end, I abandoned it. So
yeah.
For my approach, you
didn't find it to be helpful. Well, you're tracking the price and the momentum of price, and that's very important. Obviously, that's what you're investing in.
Yeah.
But I was just noticing on this particular issue that the volume on a 200-day basis is 27 million shares a day. On a 50-day basis is 22 million shares a day. And today it did 15 million. So it seems like it's going down a slippery slope on volume right now.
Yeah. And what I found, is if you try to chase volume spikes, right, the price move already happened by the time you got a volume spike, right? There was some news or some buzz or something, and it drove volume, and then by the time you tried to react to that, it was gone.
Yeah, and the fact that volume is shrinking during a rally is not necessarily indicative of much of anything?
Not in my approach. I just couldn't find anything actionable there.
Right. You know, I'm sure the information is hard to quantify. This next one I've never heard of. It's called Veeva Systems, and it was off today, 265, but it's had a pretty good run over 52 weeks from about 80 to almost 180. So it certainly had a run, but in the last month or two, it looks like it's been rolling over just a little bit. What are you seeing here?
Yeah. Actually, I really enjoy finding a new company that, because, we, anytime you do a webinar or talk to people, it's like, what about the FANGs? What about Apple? What about this? What about NVIDIA? What about Tesla? So it's cool actually to find, kind of hidden gems. And as long as it got sufficient volume, this one did 500,000 shares today, as long as it averages up in that region, I'm good to go. Brent asked a question, I think, from our last thread there about, he said, isn't momentum a read of volume and price? This is essentially a price oscillator, so it's analyzing. As far as I know, I don't know the math, but I believe it's reacting strictly to price. It could have volume built in, and if so, that's fine, right? I found this to be pretty accurate in terms of just studying momentum and price action and comparing them. In terms of analysis of Veeva, again, this is a pretty clear Elliott wave, right? We got a 1, 2, 3, we're in 4. And if we wanted to see, what's the magnitude of the current correction, if we're looking for a correction down into this Fibonacci retracement zone, these blue lines, and it got there, and you can see as it got into this wave 4, right, it found support right at the 200-day moving average. And now we see the negative momentum shrinking. And so what we would look for is a turn up and see if there's going to be, a continuation of the mega trend, which is up. It's not proving itself yet, right? It's still in this correction. We've still got, we're not putting in new highs yet. But what's interesting is, if can get the pen out, is we did have a pretty good sequence of lows, lower highs, lows, lower highs. And then we did not get a new low. We got a little sideways, and we came to this low, and this low was not a new low, right? It did not go below there. Now it's heading up. So what we would want to see would be to get this thing to go positive, some good momentum, and we'd want to see a high, higher low, new high. And at that point, we could make a case that the next wave has begun up. And we might see that when price gets above the Ichimoku cloud here, above the 50-day moving average, somewhere up in here, right? Maybe taking out this high, something like this, would say, hey, now we got a long. And if that really starts to form up, then we just might have, a target that we would be pretty happy with. And that target would look something like this if this gets going up over 198. And of course, let's peek at what the earnings date is. This could be a catalyst. And November 26th, so we got just under a month to wait on earnings. So that's a good watch list. It's a nice orderly chart. I like it. It's just not meeting my criteria to trade yet. And I've learned, if I'm waiting for price to get up here, somebody might say, wow, you're giving away entry. If you think it's going up, you might be giving away, $5 an entry. Why don't you just take it now? Well, it hasn't proven anything yet. I have a thesis that it may go up, but I'll trade a few bucks an entry in terms of probability and some more proof that next trend actually has started. So that's
I was looking at the semiconductors sector. They went up and made a new high today, but closed down on the day. And some of the software companies like Adobe, they seem to be getting a little bit of a bid. Does the software and the semiconductor sector sometimes go in different directions, or there's no real link there? I was wondering if semis is rolling over to the downside while software might be ready to go up.
I haven't studied the correlation between hardware software, to be honest. I focus more on individual stocks. I do look at sector stuff for ideas, right? And like watching over the last few months, we saw money moving out of technology, at least in the last few months, and moving into utilities and real estate. And so we actually participated. I'll show you one of the trades we took, just kind of build on that. We took NRG. We caught this nice leg up on NRG, right? That's a utility. We bailed as it started to turn over here, right? That looked like it had kind of ended for the time being, and if it pulls back to about the 200 and goes again, we might take another shot. But we made a pretty nice trade here on this utility by watching some sector rotation. And then we're still in this unheard of real estate company, CBL. But we've actually made some nice profit. You can't really, it's such a low price. We're just trading shares. We're not even trading options, right, on a low price thing like this. But every penny makes a difference. And, we got in at $1.45 and we're up here at 154. That's actually a really nice move. And if it can break this high, this thing could just take off. And look where it came from, right? This could be nothing more than a dead cat bounce or a short squeeze or something like that. But there was money moving into real estate, and this was one we found, and just one idea. So got a little off track, but had a riff going there. So
yeah, well, it's kind of online here because the next one is going to be a REIT. It's what is it? AMT. Hold on, where we go. We just went over Veeva. Yeah, AMT. Yeah, and the yield on the 10 years gone from 140 up towards 185, and so yields are rising. And is there going to be vulnerability in utilities, which obviously did very well when the rates went down, and REITs, where it did very well when the rates got cut in half. So if the environment's changing, could the environment be changing for utilities and REITs? I guess. Yeah,
it could be, and I'll share. There's a tool I like. It's just so simple and easy. SPDR is the website. SPDR has a variety of ETFs available, right? They got the S&P 500 and communications, consumer, blah, blah, blah. They got all these sectors, and these are all ETFs that you can trade. And you can look at these on various time frames just by clicking a button here. So on a 1 month basis, right, you can look at what's the S&P 500 been doing and what are various sectors doing, right? What's up, what's down. Right. And earlier, real estate utilities were up. Now they're down. Right. So that your thesis may be correct there, Jim. Look, technology over the last month is now up more than S&P 500. And you can take this information and then say, if technology is leading the S&P 500, is it is that overdone, or can we go join that trend? Or you can develop kind of any kind of thesis by just studying this sector movement. You look again different time frames. You look on a 5-day basis or whatever you want to do, and then if you were like, gee, I'm really interested in the whatever sector, pick one, consumer discretionary. What's cool about this site is you can go here and go, well, gee, what companies would that be? And for their ETF, they'll tell you what the holdings are. And that would generate some ideas for individual companies to go look at, and you can even download an Excel file of it. So that's pretty cool.
I think that's very cool.
Yeah.
Yeah.
American Tower. Everybody wants more cell phone coverage. Just don't put that tower where I can see it out my window. All right. So obviously a beautiful, orderly uptrend, and we can just, anytime you're going to analyze the trend, you want to go find out where it began. And so I would put my retracement lines down here. And so what it looks for the world like we had a big impulsive wave 3, beautiful trend. And what do we see on AMT? Well, we had a low, pretty dramatic, right? Now it's a bigger drop than we had seen in this entire move. And then we had, so that was a low, a lower high, and a new low. It went below here. Well, that sounds like a downtrend, and it sounds like a target down into this region, right? 200 might provide some support. So, timing your entry, you'd have to figure out, if I were to take this short now, where would I put my stop? Gosh, for me, there might be something on a 60-minute chart, but the stop would be there. So if we're going to enter it here, right, and if it's going to fail at the 200 potentially, this distance is less than this. So this is my risk, this is my reward, and so this is less than 1-to-1. So at this stage, it doesn't meet my criteria. But if it pulls back up, like this, and then reverses down again, now I may have something. I would get a stop there, maybe an entry here and a target here. Now this is bigger. So, trading's like this. You got to identify candidates, and I create a watch list. I maintain it. I come back to it every day, and then see if something interesting develops. For me, it's rare to log in and go, oh, look, the perfect trade just appeared today. For the most part, it's really watching these things and having 20, 30, 40 symbols on a list and having some criteria established, and then when the criteria is met, you pull the trigger on a handful of them as it plays out. So that's my take on AMT.
All right, we're about halftime here. I think it'd be a good time to switch over to some of the things that you're personally looking at, and a little bit of insight onto what you think they're all about.
Okay, let's found one we've been watching, and this is CNC post earnings, and you've heard me talk about this. So we had this really nice, impressive move up. We had a really nice correction, and now it looks for the world like a new uptrend is beginning. And let's just show what that looks like. Here's a perfect correction. It went a little deep, but it stayed above a disqualifying level of 76.4. And so we would do our Fibonacci extensions to get a idea of a price target. So we got a price target up here at $70, right, or above. And with current price action, what we see is we got positive momentum. We're up above the 50. We're up above the Ichimoku cloud. And we got a nice little sequence of a high, higher, low, high, higher, low, high, higher, low, high. That's showing me some pretty good evidence that wave 5 is underway. Could it stall at the 200, or is it going to blow through it? We don't know. I'm going to have to watch that. It would be a risk, but the potential reward on that might be worth it. So CNC, Centene Corporation, it's a candidate. Trades a great volume. It's already reported earnings. So that's one that I like. What other secrets am I willing to share? Aflac. And you can do the sound effects on this one, Jim.
I was going to say.
Same situation, big long run up, perfect correction, clear evidence that it's starting up into wave 5. We got a nice target. It's past earnings. There's really no obstacles either. It's above the 200, above the 50. It's above the cloud. There's no real major pivot to reversals in the way, short of the all-time high here, which is really close to the target zone. So Aflac, that's a real candidate for a long. I showed 2 longs. Let's look at a potential short. I'm going too fast. We're going to get through this list well before the time, and that's okay if we're efficient, right?
Yeah.
General Mills is a short candidate. You can see the big picture here is this big move down, a correction up. We're looking for a follow through down, a wave 5 down, and they've already reported earnings. They are down through the 50, down through the Ichimoku cloud. They are down through the 200, and they got negative momentum, and it's growing. And the target on this could look something like this, down between 44 and 37. That's pretty attractive. So GIS is a short candidate. And I don't know if, I believe the format, people, if they have other things, right, or questions, they can certainly type them in as we go here.
Yeah. If you have any stocks that are not on the list, please let us know. And if you have any questions on any of the technical indicators or the approaches that Dean's talking about, this is the time to ask.
Yeah. All right.
Do you want to jump back to the list?
Let me.
Or do you have one more?
Let me.
Obviously, you have a universe of a lot more than a couple of stocks. So obviously, the idea is at the end of the broadcast, people try to reach out to you and try to get a little bit more current on what you're doing.
Yeah. Here's another one. This is a trade we're in, but I think this is one I took with my own account, published to my subscribers. Am I doing it wrong? Teva. I was saying Veeva. Teva.
Oh.
So Teva is a pharmaceutical.
Mm-hmm.
They actually were part of some backdrop. I'm a technical trader, but I want to know what's going on with these things. So they're part of the opioid group lawsuit,
Right.
and part of the settlement that may limit their losses, and that caused this big pop here, right? Right here, off the bottom. Just from a technical standpoint, you had this big, huge drop. Then you had a nice high, higher low, breakout off the bottom, pulling back. So we got into Teva at 748, sitting up here at 838. So we already got a nice profit. We took some up at this peak, and it looks like here's the next potential resistance area is $10, right? I'll take, even now, I think it's got good positive momentum. Again, a nice sequence of high, higher, low, high, new highs, and it could go beyond this. This is just a potential resistance area. I don't know, Jim. How'd you like to buy a stock at 838, take it to 10, in a few weeks?
That, and I think Buffett is still an owner of this company, isn't he?
Don't know.
Yeah.
Don't know. Could be.
He was in there for a while, and then the other thing is this really fell off the map because of that legal situation, which seems to be in the process of getting resolved, and the volume has been pretty darn good. People,
Yeah.
In fact, on that one day, I think the volume was like 4 times normal, and then on the little pullback you're talking about, the volume was lighter, so that's kind of in line with the Elliott wave stuff too, right?
Yeah, and the boogeyman shrank, right?
Mm-hmm.
Could be something. Yeah, so we like it. We're in this, and I think there's still room. So that might be an idea folks would be interested.
And anything under $5 or $10 is pretty much like buying an option anyway.
Yeah.
I've always felt that, if you're paying under 5 or under 10, unless the company's going to go belly up, you got a long-term option on it. Let's go over to Abbott Labs if you want to do that, and we'll check out what this classic, legendary, historical company is doing. Today, they had a decent day, up almost 1%. It's coming off of some lows, I guess.
Yeah.
And the question is this the beginning of something? It looks decent, right?
Yeah, and you want to look at this correction, and we've had a couple like this, in the backdrop of this long, incredible uptrend, right? Did we have a sufficient correction for it to be a wave 4, right? Or is that still coming? It's tough to say. It seems to have always found support at or near the 200 and then proceeded on. But this uptrend has been going on since, it really started here at the beginning of 2016, little sideways, and then the breakout in 17. So 17, 18, 19, right? The 3-year uptrend. Trees don't grow to the sky. This thing will correct at some point. I'm kind of loath to chase long mature trends. I just don't like them. I like, because when are they going to end? Well, who knows? Could go another year. Could go another day.
Mm-hmm.
This pullback right here, it's real, right? There's a series of low, lower, high, low, lower, high, low, so far lower highs. I want to see if it reverses here. Again, I would not try to chase this up just because of the length and maturity of the trend, and I'm kind of wired to not do that. If we were to get a good break under here, under the 200, under this previous low, then you got it all the way down into here. So I'd be interested in a short if these things happen, right? I just wouldn't try to chase it up, but it's certainly not ready to short yet, right?
Yeah, because it held that 80 area, which is the former highs over there earlier in the year.
Yeah. So, good solid break under the 200, under this prior low, something like this. That'd be a short entry for me.
You
And
got a lot of real estate underneath.
yeah, nothing but air, right? So that would be good.
Well, everybody tells me that this is a great company, Micron Technology, and today it went up towards 49, but then it closed down on the day. So I don't know if today was some kind of reversal to look at, but what's it looking like now?
Yeah, it looks like it's a little choppy, but overall, big impulsive move, really nice correction right into this zone. And then, these pretty good swings, but, high. When it pulled back here, it didn't go lower. Then pretty decent sequence, high, higher, low, high, higher, low. And now it's heading up again. So it's in an uptrend. There's some real proof of that. This one swings. And if you want to stay with it for the long term, you either you got to decide what time frame you're trading. You want to catch these moves, up, down, maybe you trade that on a 60-minute chart. If you're trying to catch this move right here, so far it's moved kind of like that in fairly large swings. If you're wanting to trade this, you have to decide that. You got to run with fairly loose stops, right? If you're trying to trade that and then that and then that, you have to decide that, and you can do it on a smaller time frame, a little tighter. But that bigger thing is definitely going on.
Mm-hmm.
It's just, do you have the patience to ride that, right? And you just have to decide ahead of time. You don't want to try to trade this with super tight stops. You're gonna be right in a 6 month to a year time frame, but probably lose money. And that's kind of a miserable thing in trading, right? Is if you're right and you lose money.
Yeah, this stock certainly swings. It was in 60 last year, then down to 30, then back up here to 50, and now we are where we are. That area around like, 44 looks pretty good, huh?
Looks like Brent's got a couple symbols here. You want to peel off and Mitch too. You want to?
Sure. What do you got?
So Mitch wanted to look at EAF. I don't recognize that off the top of my head. Let's see.
It's Graph Tech International.
Yeah. So just $1.2 million today. So the volume seems reasonable.
Industrial electronics is the looks like it's been right around that 10 as a base for quite a long time.
Yeah, and so we got this big move down, and so what would some kind of retracement to that look like? Well, it would look like this or this. So it seems like it's already kind of retraced. This is a big low. Then it pulled up. I'd look for a reversal and maybe a short entry down here. I'd be hesitant to try and take it long because there's just not much room in that retracement. So if a short setup down here, somewhere at about $12, it's there might be some room to go down on this thing.
Got any earnings coming out on it? Can you see?
EAF, let's look. Oh, I moved away from my site there. Earnings whisper. November 7th, so we're just over a week out.
Yeah,
on that.
That may have some volatility effect, huh?
Yeah, it could.
What else I got on the question board?
BDH.
BDH is the symbol?
Yeah, I typed that in, didn't get nothing. So Brent, not sure what that is or if he had a typo there. He also had MTCH.
That's another one not coming up. Oh, MTCH. I got you.
Yeah, Match Groups. Is this the dating website?
Yeah, it probably is. Yeah.
Yeah. So it looks like a pretty good correction setting up. It did correct once before and carried on. You can make a case that this was all 3, 4, 5, and after 3, 4, 5, there's quite often an ABC correction, something like it's a little sloppy, A, B, C. So it could go bigger. You got this 200 potential support area. So, given where it's at in its kind of life cycle and that support, and I don't really like to trade complex corrections. So it's, I'm not going to trade this one. Looks like it's heading down. It may not be that great. And then Brent corrected BDX.
Match might be very interesting to know when the earnings are, because it's right there at that 70 area. And if news hits one way or the other on that, it could instigate quite a bit of volume.
November 5th. So next
Coming.
week.
Yep.
Coming.
That might be something, because it's been in such a tight range. It might even hit some of your criterion for strangle or straddle before the thing, because it's been trading in a pretty flat range now for about a month or so.
Yeah. Yeah. And that, the whole straddle strangle thing is really a trade-off, right? Of looking for a big move, but not having to pay for it, right? Because if everybody's expecting it and the IV's been bid up, even if you're right, you're not going to make any money, right? And on the losing side, you're going to get the IV crushed. On the win side, you're going to get it too, and you're not going to move deep enough into the money to win. So you got to find those needles in the haystack where you have a good move coming and you don't have to pay for it. And there's profit on the winning side of your straddle or strangle.
Yeah, this guy took this. Becton Dickinson took off pretty good today. It was up over 3% in one day.
Yeah, and it moves, doesn't it? It's today's candle wasn't unusual for its history. This thing, I don't even know what they do.
I think they're in medical equipment, supplies, things like that.
Interesting. So it's really kind of in a bit of a channel right now. In terms of a wave count, you really can't get any. These are kind of the frustrating ones. And look how it failed at that all-time high. Right? You really can't get any kind of wave count. You got a channel here, and then you got
it's kind of range bound. Yeah,
a little narrower one going on in the nearer term. So got to see it break out of this before you can, I think, try to do anything. Otherwise, it's just gonna swing back and forth. That's what it looks like. But
do the waves not help you as much if you're in basically a range bound choppy market?
They really don't. Sometimes when you get clarity, like we had on some of the earlier ones,
right?
Even if you're in a short-term channel, but the context is in a bigger wave count, you just wait for it to break out in the direction you want and then take it.
Mm-hmm. Be patient and then act.
Yeah. It's trading's all about discipline. You gotta let them come to you. You can't go chase trades now. Right? Say it's rare to log in and go, there's the one.
Don't let money burn a hole in your pocket, right?
That's right. The great saying that I've got some pilots who are, have been customers and students, and as I talked about that same topic, right? The pilots say, yeah, we got that saying. It's I'd rather be on the ground wishing I was in the sky than to be in the sky desperately wishing I was on the ground.
That's fantastic.
Yeah.
I'm going to remember that one.
Oh, Lord, get me out of this one.
Oh, well, any more on the board for questions, or do you want to go back to the list real quick?
Yeah, I think we're at Fitbit. Now, I think, didn't Google announce they're buying them? Did I hear that?
Not sure.
Did I hear that?
If they did, they're not paying a very big premium. Oh, I guess they did. It went from 4 to 6, yeah.
And here's another, I'm just sharing all kinds of websites. Surprisingly enough, a really great resource is Yahoo Finance. I think didn't AT&T buy Yahoo and now it's Oath, but they haven't done a thing with it. But they have an amazing, if you just want to know something about companies real quick and dirty, it's not a bad website. So Yahoo Finance, and if you can make the pop-up ad go away, seriously?
Hey, those are the Vegas Kings.
Well, where's the window, man? Talk about how awesome it is. Okay, here, you type in a symbol. And again, if you just want, come on, telling everybody how easy it is, and then I'm having a terrible time.
Abercrombie and Fitch, they supposedly had some inordinate activity in options the other day.
Yes, if you want to know the average, look at this. Fit, 40 million today. The average volume 7.4. So obviously something happened, right? So here's just some quick stats about a company. What what business are they in. You can hit profile here, and you can, oh, these guys make science and technical instruments. These guys make, little thingies you flip on your arm and count your footsteps. And they also have aggregated headlines from all different sources, right? And if you want to know if Google's going to buy Fitbit, you would find it here. So that's a really, really good resource. I like that. Just a quick look up stuff.
So is that the news on this company?
I didn't see that. 6 hours ago, the reason they could be an attractive M&A target. Alphabet breakout could blah, blah, blah. You have to go Alphabet wear and tear. So there's a bunch of Alphabet stuff here. Eyeing Fit. So Google eyeing Fitbit. Doesn't say anything, and no headline anyway about an announcement. And when there's an announcement, you'll see this this very unique price action pattern that you should absolutely avoid. So you'll get a huge jump on an M&A announcement, and then you'll get price bars like this forever, right? Until the deal is either consummated or falls apart.
Yeah.
Never trade that, right? Yeah. Because it goes to the price of the offer and sits there, and you can only lose, right? It's either going to get the price or the deal's going to fall apart and it's going to tank.
Right.
So that is, never touch that trade, in my opinion.
This stock has 13% short interest, so I'm sure with that kind of news, everybody who was a little concerned about being short also covered up.
Yeah. All right.
VRSN?
I don't think that's Verizon.
No, it's not Verizon for sure.
Verisign. So they're a software company, right?
Mm-hmm.
So we got wave 4 happening. There was a little fake one here, but it found support at the 200. What's different now? We're down through it. Support broke. Now it's resistance. We're about, I think we got, you know what that's called, don't you, Jim? The 50 over the 200 down.
Yeah, I think this one looks like it's setting up pretty good if it's going to start cratering a little bit, huh?
Right. The cross up is the golden cross. This is the death cross, right? And so...
And the clouds above it.
Yep, clouds above it, the 50s above it. I think we did get a cross. So what's the target for this correction?
Looked to me like 150 would be in the cards, huh?
Yeah, the Fibonacci zone is 166, clear down to 134, midpoint right around 150, like you said. All right, This looks like a nice short of Verisign.
Yeah, I was going to say, thank you.
Yeah,
I didn't. That wasn't on my radar.
off the list, that's the one I like the best so far today.
Yeah,
VRSN. Of course, it's probably going to be announcing, and it's going to blow. Oh no, they've announced. They're out. So next one is in January. So commercial break while I get my notepad out.
Yeah.
Like it.
And this is one they were saying is going to be they're reevaluating the PE ratio upwards, and that's what's been helpful to Target. Gone from 60 to 114 this year, and now back down to 108. But with Walmart having a PE ratio in the 20s, I guess 26, people are saying 15 PE ratio on Target is way too light, and that's one of the reasons people have been bidding it up, among others. So I don't know if we have TGT up there.
Target.
Yep. Yeah, Ross Stores is at 25 to 1 PE almost. So, they thought a lot of people were saying 13, 14, 15 on Target. The PE ratio was way low, and they started now it's up in 17, 18ville, but that could be supportive. Today it rolled over a little bit, but nothing to write home about.
Well, Target's a gapper, isn't it?
I guess so.
Gap down, gap up. Earnings are on November 20th. So based on its recent history, right? Back here, it's a gapper, right? So that could be a candidate for our option strategies. We get closer to it, run it through our filter, right? I would be worried about taking a directional position now. Earnings are 3 weeks out. You might get something that's, it's after the gap. It's still in an uptrend. It's got a high, higher, low, high. So far, higher, low. Find a little support in the cloud at the 50. So I wouldn't try to short this. And there might, if you're bullish on it, there might be a long entry here, but it would have to be short term given that earnings are coming up in, call it 2 weeks. So there's that. I think we got time for one more before we do our wrap, huh?
Okay, sounds good. And this one I've never heard of, so why don't we close on one we never heard of? TREX, and it's 84 bucks. It got hit today, and the industry group is building materials. So again, like your Home Depot rolling over a little bit and your Lennar rolling over a little bit, these have had big runs. And the question here is obviously, is it time to hedge or get out or do something?
So I think this is the company that makes the plastic lumber for decks and stuff.
Okay.
And I've got first generation Trex on my deck, and it's not that great. The next generations are amazing, and I was thinking about replacing it, and I went and did it. It was like 10 grand, so we still have first gen. In terms of the chart, it's actually, the new stuff is really, really good stuff. It's really good.
Do they do the shutters too?
I don't think so. This is all planking and railings and stuff. Okay. Made of recycled plastic, and
for the heat, for the heat out here in the desert, some of these people tout that they have a wood substitute that won't be a problem or something.
Yeah, I kind of think this next, we had a run up, we had a correction. This next leg, it failed. It didn't, really put in any impressive more highs. Now all of a sudden it got beat up. Did they just announce? Is that the deal?
Probably. The volume was 4 times normal.
Yesterday after the close. So this morning opened with that information. Yeah. So might be a short setting up here. Could be. It's a pretty big gap down, 8%.
Good example of why you'd want to do those straddles and strangles you're talking about from time to time, because if news does hit, things can happen.
Yeah. We missed one here. We'll get that. I think we'll get this last one from the audience, and then maybe we'll
wrap it up. Yep.
ALB, Albemarle. Well, they've had a bad year or two, haven't they? From 140 bucks down to 63. So they lost over half their market cap. Is it putting in a bottom? That's the question. They had a move up, it channeled, and then broke down into a low. So their little bottom bounce there didn't pan out. So you got to wait for the next one. And I would say it's got to break out of this before you could get too excited about it. And by then you got the 200, you got this prior high. So I think there's better bottom feeding to be had out there for now. If it can break the 200, there might be something up here, but it's nowhere close to that.
Yeah, getting above 75, because the 75 level was the lows early in January this year, and they've been kind of hard to get above 75. So getting above 75 would certainly turn the light on a little bit, huh?
And that's way different than, this bottom move is way different than the one we showed earlier that I do like, which is Teva, right? This one broke out.
Rounded, yeah.
Okay, and a clear break and really good. And didn't put in, on the pullbacks, did not put in new lows where the Albemarle did.
Okay. All right, we're at the top. Yeah, we're at the top of the hour, Dean. Let's refresh people's memory on who's been speaking and how Follow Me Trade work. And again, you've got education, you've got trades that you're doing, and you've got all types of assistance. And as you can see here, anybody who's been listening, you've got a lot of different ways to help people research different ideas as well. So, just let everybody know how to get a hold of you.
Yeah, so here's my website, followmetrades.com. That's me right there with the pen. I do, primarily a stock picking service and a trading room that's a part of that service. I got a running track record here. It's audited by third-party CPAs. And for any given year, you can go click and see every single trade I took. So I believe in complete transparency, right? Win, lose, or draw, right? So we got a track record. If you want to just check it out and, find out more, I got a free weekly newsletter. There's a big green button here. You can just sign up for the newsletter. And I publish weekly my look on the market and kind of what the big deals to watch for are. Love to have you come check it out, anybody who is interested.
Well, that's great. And guys, like I say, I've been around a long time. There's a lot of people out there with information. I mean, you can see and hear there's a lot of value to talking to Dean. So do take advantage of getting acquainted and then take it from there. I'm Jim Kenney. For those who'd like to hear what I'm up to and what I'm watching, it's optionprofessor@gmail.com. Just shoot me an email and we'll give you the weekly update that I hand out. And other than that, I'm going to take it back over to David. And thanks a lot, Dean, for showing up here and enlightening the crowd.
Oh, I gotta do one more thing. So we talked about earnings, and I'm rolling out a new earnings strategy, right? So our trade for the day today, well, one of them was Maxim, was a straddle, and after hours they announced, and we got a 10% pop. So that looks like if that holds tomorrow, we're going to have a winner. So
good one.
How fun is that?
Doesn't get better.
All right.
Thanks, guys. Great show. So just a quick reminder to everyone watching, be sure to subscribe to Timing Research on YouTube and your favorite podcast network. And you can also go to TimingResearch.com to get access to this show, the archive, as soon as I post it, and any of the past shows. Also, on Thursday, Anka Medcalf and I are hosting another one of our multi-speaker events that we've started doing recently. So this will be we're calling it Halloween. So it's an online cannabis traders conference. So it'll be at least 3 presentations about cannabis stock trading and investing. So Lance Ippolito, David Modell, and Anka Medcalf will be giving presentations. So you can go to TimingResearch.com/live if you'd like to join us for that. And just want to thank my guests again for this week. Dean Jenkins of FollowMeTrades.com. Great to have you back on the show. And Jim Kenney of OptionProfessor.com. Thanks, everyone.
Thank you, David.
Thank you. Great to be. It was fun.